Welcome back. You're still tuned into Midcap Radar. Well, let's talk about some stocks now and get some corporate conversations going. Puravankara is surging on the back of a good fourth quarter business update. The pre-sales volumes are up 41% sequentially and up 93% on a YY basis. The management says that they had the highest ever sales value in FY24. Abhishek Kapoor, the group CEO of the company, is joining us now to discuss this and also what's the plan going ahead with sales and volumes as well. Abhishek, good afternoon. Thank you so much for joining us. I just wanted some internals as well. The total launch pipeline that you had guided for earlier was around 15 million square feet in FY24. How much of it has actually seen an execution? What was the launch pipeline that led to this kind of volumes, almost 7 million square feet in FY24?
Well, thank you and good afternoon to you too, Sonal. So essentially, when we had given guidance, we were looking at about 15 million square foot for the year. And we landed up with about 10 plus million square foot of development area under development now, which has been launched. And the 5 million that we had thought we would be able to get in the last quarter has kind of spilled over to the next couple of quarters. But these are all launches that have not gone anywhere. And fortunately, from the value point of view, we've still been able to achieve what our internal aspirations were. At close to about almost getting to 5,914 crores. So overall we are very excited with 7.35 million square foot having moved from 4 million is a pretty exciting thing, and we are optimistic about how we take it from here.
Just a follow-up to that. So you had a target of close to 15 million square feet at the start of FY24. You ended up achieving around 10 million square feet. So now the remainder 5 million square feet, you said will go to the next 2 quarters of FY25. So where are you now starting FY25 at in terms of expectations of what you'd be able to achieve?
That's a very good question. We don't give any guidance on the value which we are targeting. But definitely we'll announce our indicated pipeline of launches in the coming year around 15th to 20th of May post the board meeting. So that plan is in works. Internally, we are working on our group AOP for the next financial year. And we believe that we will continue to push the trend up in terms of launches. So, of course, there is a spillover inventory which has come in sustenance with these launches as well. That will enable us to continue the sustenance business and grow it. Along with that, we will add to that the new launches from within the existing inventory which we have. We have about 30 million square foot, which we are yet to take to market now. And plus, we will take the new additions that we are making. Like example is last year, we added a redevelopment project in Bombay, in Lokhandwala. So that will definitely come in the next financial year. And a bunch of projects from within the current land bank will come in. And some projects that we are hoping to conclude in this quarter and the next quarter will also come in. So we will kind of make those announcements as we conclude those internally.
We consider these updates as earnings only sometimes when we ask you the questions that would be forward-looking. But Abhishek, just wanted to understand the debt picture as well. Qualitatively, if not quantitatively, we would love if you give us the quantitative data as well. Have you seen further reduction in the quarter gone by? Because you're talking about a lot of launches, you're talking about CapEx, you're talking about the Mumbai redevelopment project as well. What does it do to your debt going forward?
So as we have always spoken about it, there are 2 parts to it. One, debt being taken to build the commercial asset. Second is the debt that is getting repaid from the existing residential, portfolio, because that's self-liquidating. And third category is what we are adding in terms of reallocating some of the capital from other markets and other projects into new acquisition. So on account of new acquisition, clearly the debt should go up. On account of current residential developments, the debt will come down because those will get repaid. And then, of course, as I said earlier on a debt per square foot basis, which is area under development, which is the real measure for us in terms of how we see our debt profile, is going to be very, very critical. So on an ongoing basis, on a per square foot basis, we'll be very much range bound. On an absolute number, you can expect some increase because we are aggressively looking at new acquisitions while we repay some amount of debt. But generally, I think we are going to be range bound as far as per square foot debt is concerned.
Understood that. Just to ask you another question, give us a sense of, what is the on-ground trend in terms of, you've kind of missed 5 million square feet of delivery in this particular year. So can you assuage concerns whether it was supply-led or demand-led? And when it comes to demand, can you give us trends in terms of how exactly realizations are panning out? Or do you see some aggression even from buyers?
Look, I think from the demand perspective, demand is pretty consistent across all categories. Whether you look at plotted development or luxury or mid-segment, all categories we are seeing consistent demand and increase. Price appreciation has been between 12 and 25%, depending on the project, location, micro market, and the product that we are taking to the market. Having said that, I think today, if you look at the inventory overhang across the industry, is very low. It's somewhere between 8-9 months, going up to 12 to 13 months. Therefore, we don't see any significant, challenges as far as the demand is concerned or price is concerned. I personally believe that the price, on an average, across the country will continue to increase between 8 to 9%, which will be inflation plus 4%, 3%, or 5% sometimes. So I believe that will continue as a trend. Having said that, one thing that is very clear that we are seeing as a trend is that the consolidation will continue. Stronger players, stronger brands continue to take away more and more market share. I mean, if you look at us, for example, we have grown by 90%, where the market has grown actually by 16%. So obviously, clearly a branded developer will come in and take in larger and larger market share, depending on what kind of volumes they can bring to the market. So I think that's the general trend that we continue to see.
The general idea that we're getting, at least in the Mumbai market, when we speak to companies or experts, is maybe the prices have peaked out because the supply is way more than what the demand is right now in the market. But I'll come to your Mumbai redevelopment project as well. Last question on the debt. I wanted to understand your cost of borrowing. The last known numbers was 11.49%. We have not seen a rate cut now. How do you plan to bring that cost down? What is the split between banks and NBFCs when it comes to your debt split?
So the way we are seeing debt is we intend to continuously bring down debt, cost of debt for us. Since all of these projects are moving into under construction category, largely our debt cost was slightly higher on account of the fact that most of the debt was taken to launch or to buy new assets or new land. And that's where the debt cost was higher. Now, going forward, as we see these projects going into production and construction, we will definitely see that the cost of debt will come down. So our endeavor is to bring it down. Having said that, you're right. The cost of the repo rate has not been reduced, and therefore we're not going to see any significant impact, which was actually surprising in my mind. I thought that this would be a time when you would see some kind of an impact and some reduction, but I would guess in next 2 quarters we'll definitely see a lowering down of interest rates.
Understood that. Now, talking about your foray into the Mumbai market, would you be looking at new projects? Are you looking at redevelopment projects? In the past, you have, spoken about JVs with other companies or with other developers. So, what is the route that you're taking, and what will be your share of the profits, or what will be your share of the JV, whichever route you choose to take?
Right. So, from a Mumbai point of view, redevelopment is clearly our strategy, and it's going to continue to be our strategy. We are currently actively pursuing almost 20 opportunities in the redevelopment space. 4 of these opportunities are in very advanced stages of conversation, and we are looking at concluding some of those very, very soon. Though it's a longer process in terms of the process time that it takes for getting a redevelopment projects. So from that point of view, that is definitely an opportunity. And then for JVs with the developers or fellow developers, definitely that's a continual process. We are open to those options, but largely they are JDAs than more than JVs, if at all. And our goal will be definitely to look at some of those opportunities aggressively. So we are out there in the market evaluating some of them. Hopefully, we'll make some announcements soon.
Okay, and redevelopment would be a separate discussion altogether, Abhishek, because there's so much happening in this space. But we'll leave it for now, and we'll discuss that later after your results are out as well. So thank you so much for joining us today and giving us all those details. So that's the word coming in from Puravankara, talking about good growth that continues and maybe some more price hikes that the developers are expecting. The stock is up by 5.5%. We'll do one thing, we'll slip into a break. As we do that, we have an announcement to share with you all. We're launching CNBC TV18's first ever live personal finance webinar, CNBC TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on